Welcome back. Things are getting choppy for our markets. At 1 o'clock, there was a fall in the markets. At 1:30, there was a recovery. Closer to 2 o'clock, there was a recovery. And then at 2:30, once again, the fall. So 17,862 was the recent high on the Nifty just in the last 10 minutes. So from that level, we've given up close to about 35 odd points. Sanjay Dutt, Director of Quantum Securities, is now joining us on the phone line. Sanjay, what's the read-through on the markets? Despite a positive handover from the global markets, the Indian markets are grinding lower year to date. The S&P 500 is up nearly 4%, while the Nifty is down 1.5%. Is this a sign of things to come?
I don't think so. One needs to worry about, what's happened in the last 10 days, the first 8-9 trading sessions of the year. It's too early to really pass a judgment about what lies ahead. But I think there continue to be individual opportunities among sectors and stocks in the market. And investors need to use, extreme weakness, extreme levels to basically accumulate. I don't see any reason why that changes as to what it was last year and the year before that. Stick to specific stories, indices may just carry on and do nothing.
Okay, all right, carry on. Keep calm and carry on, right, as they say. Sanjay, hi, good afternoon. So what are your broad expectations from sort of this year? The budget is around the corner. Any thoughts on that? We're in the midst of the earnings season. There is this ebb and flow, right? These are, of course, regular events, but important in terms of the market calendar. Your thoughts?
I think the earnings are more or less in the price. I don't see much happening after the December quarter earnings are done with by end of the month. I don't see much of positive surprise coming in anywhere. Most analysts have got their estimates in place for the December quarter, barring, aberrations, both negative and positive. So earnings won't have much of an impact on the market unless some very negative surprises show up. Budget would, I think, be a good document. May just turn out to be a defining moment, because I have reasonably good confidence that the government would continue to put the economy on a growth path. We are just about coming out of post-COVID and the post-Ukraine events. Inflation is cooling off. So I don't see any negative surprises really in the budget. More so because we've just got about a year out for elections ahead. So the focus would shift primarily on what will happen in the budget and not that much in earnings as such. And obviously, individual company earnings ahead is what will drive stocks. Like I said, that, indices may not do much in 2023, whether it's Nifty 50 or the sensex, but within mid-cap, small-cap space and some of the large caps, one would see outperformance.
All right. Hi, Sanjay. Thanks so much for joining in. Always good hearing your thoughts. Sanjay, everyone's been talking about China and the China reopen trade. Now, that's what's fired up our metal stocks. You have been bullish on select counters. I recall you talking about Hindustan Copper, Nalco, JSL Stainless. Well, that's a multi-bagger for you. Could you tell us what's the outlook on metals from here on? They've already had a good run. The index itself is up 15-18%. Your view on the metal stocks, what's still looking good at these levels?
I think metals continue to look good. I think this year you would see outperformance in metals. Another area which looks interesting to me is the oil marketing companies, IOC, HPCL. If you look at them, some of them are just trading 2 times or 3 times cash. If you look at an IOC with the EBITDA on a trading 12-month basis of about 50,000 crores, an enterprise value of 2.5 lakh crores in a market cap of just about 1 lakh crores, trading below book value. So I think there will be some re-rating coming in there, and more so because crude prices have cooled off, and I don't expect crude to really go back to 110, 120. So these companies won't be hit that badly. That's, I think, a good trade for this year, the oil marketing companies, and everyone's ignoring them at this point of time. No one wants to touch them. Similarly, I think some of the key FMCG stocks also, like an ITC or a Reaver, etc., may just outperform because input costs have come down, whereas the shrink inflation in terms of package sizes or price increases have been passed on. All of them are never pulled back once you have a price increase taking place. So FMCG margins will also improve if inflation starts to come off. So these are 2-3 pockets, metals, FMCG, oil marketing companies, where I think there is strength. Of course, the obvious ones, which will carry on with their capex and infra capital goods, even those select pockets are always there and will continue to perform well.
Sanjay, when it comes to ITC, and that's a stock which you said you like, there is that event risk of a budget. We've not had a tax on cigarettes for the last couple of years now. Do you see it coming? There are a lot of reports which suggest that we may have a tax coming through on cigarettes this time. And if it does, it will be a derating event for ITC, right?
Well, very interesting, because I don't see any re-rating in terms of people wanting to come out with aggressive buy reports also come in because of so-called ESG issues. So I think that will really be a non-event. You just might see a dip, and that will be a buying opportunity. Because if you look at ITC, irrespective of anything, the cigarette business, taxes or no taxes, would generate anywhere between 15,000 to 20,000 crores a year of cash flow. And you have the FMCG businesses, you have a lot of other businesses which are now stabilizing. I'm not saying they are gung-ho generating cash, but they're stabilizing. The brands have, pretty decently matured and has a good brand recall. So I think next year or two ahead will be good for ITC, and I'm also confident that there would be value unlocking there in terms of whether it's demerging the hotel business or whether it's something to do with the IT business. There is also talk of some bigger event happening in the company. So I'm fairly confident that ITC would be a buy in case, to answer your question, in case you get some aggressive taxes or anything and the stock dips. That would be a good opportunity to actually add some more.
Okay. All right. Sanjay, before we let you go, I recall when there was plenty of supply coming in on Zomato, you had a contra view. You went in there, I think you chipped in at around that 40, 42 odd mark, and that's worked out pretty well. What about Paytm or some of the other names? Because suddenly there's a lot of talk of supply coming in on Paytm as well. We had a large trade that took place just a couple of hours or so ago. Your take, has Paytm come to that level that you would like to give it a look, or you're avoiding that for now?
No, I don't think so. The difference between a Zomato and a Paytm is that Zomato is something that's quite ingrained into the society and into the Indian, consumer psyche. And also, I think Zomato will become cash positive much earlier than Paytm or any of these people would. And also, the bigger problem with Paytm is that, most of them are dependent on their business volume on the, UPI business, where there's too much competition from Google Pay, Phone Pay. So I'm not that confident about a Paytm model versus a Zomato model. So I would stick to a Zomato. Maybe I would buy something like a PB FinTech, that's the Paisa Bazaar. Even there, I'm not that gung-ho, but I think within these new lot, Zomato is the only one which made sense to me, and it still makes sense to me to buy and hold on if anyone likes for a little longer term for their portfolio. Longer term meaning about 2 years from now and not 3-6 months.
Okay, all right, Sanjay, we'll leave it there. Thank you very much for your time. It's always a pleasure having you with us. We'll get you back on, around the budget as well, once the budget news flow and expectations, etc., get into full swing. Thanks very much for that. Well, the market's slipping again. We're down about 70 points.